Hello again. Today is Friday, February 8th, 2019, and today is a special day because we're finally introducing the Indiegogo campaign team members. And very exciting news, we are developing a MetaTrader 4.0 indicators, and I will show you some of that. So let's introduce the team. Yours truly, Alexander the Burger, that's me. You know about me. You can read about me here. This is my another partner, Alex Sadowski. He holds a mathematics degree, so he is really checking my work and developing new applications, for example, for the MetaTrader and for other stock trading software that we're going to be developing the indicators for. So hopefully we'll get that working on pretty soon. In fact, I'll show you a screenshot of a MetaTrader very shortly. And of course, my wife, Marika Felberg, she is a psychologist, a life coach, and a consultant, and she has been consulting with clients from MasterCharts Trading, and now we have a new hashtag, everyone can trade, and she's been very helpful for many traders to overcome various hang-ups that they have about trading. So that's another aspect of our everyone can trade slogan. So here it is, MasterCharts Trading indicators, and I almost cried when I saw this, because this, for me to practice to program this 4 lines in, took me 2 years on on TradingView, but Alec did it in literally a couple of days. So here it is on MetaTrader interface. We're working to release this indicator package as soon as possible. Hopefully we'll have a expert advisor as well working pretty soon, but this is basically a big deal. If you trade on MetaTrader, then you can have the indicators in your MetaTrader and you can use them to make trading decisions. So again, I wanted to say that we have MetaTrader 4.0 indicators in development, so please sign up for a mailing list to get early access. We also may be releasing beta version for early adopters, so do sign up on our mailing list. Okay, so let's look at stocks again today. Large caps are outperforming small caps. Junk bonds seem to be confirming that the bullish posture again. Looks like stocks have shrugged off this December 2018 swoon and just continuing higher. Foreign stocks are under pressure, especially Japan. So we will look at that. Treasuries, investment grade bonds are moving higher. This could be a pause in the stock rally, because usually the bonds and stocks move opposite to one another. We look at dollar, it's moving higher, but gold is also not moving lower. So I somehow feel that gold may be the correct in this case, and we'll look at natural gas, and then it's been really acting in a positive manner for us, and finish off with a crypto review. All right, let's continue, or rather let's start with S&P 500. Here are the S&P 500 futures on the daily time frame as usual. So here I can actually, this is I sent to my subscribers. I changed my allocation and my retirement portfolios. In the United States they're called 401ks, sometimes 403bs, to more heavy exposure to stocks, but I also have some investment grade bonds and have some cash. But this seems like a breakout to me here on the 5th of February, or on the even earlier on the 31st of January perhaps. This looks like a genuine breakout, and I think if it is a genuine breakout, then we should be seeing new highs within a relatively short period of time. Dow Jones Industrial Average, even stronger breakout Nice move there, and even today, see how I like this price action, how it came down to the blue indicator line right there. And again, you can find out more about it at MasterCharts Trading. And looks like it's bottoming here, so I am thinking about buying stocks now. I'm not thinking about shorting stocks anymore. Up until relatively recently, if I go back to S&P 500, you can see this red line, and the touch of this red line happened as early as 7th of January. Now, I did not send any alerts to my subscribers, nor did I short equity anytime throughout this wild and crazy December and January. The reason being is because stocks have a tendency of going higher. They have a bullish bias, what I call. So to short stocks would be more difficult. Usually we try to short stocks maybe during an overt bear market. Here, even though we had a significant drop here in December, perhaps the bearishness was a little bit overdone, and some of the other indicators I was watching did not really confirm a outright bearish posture, so I was very reluctant to send any bearish alerts, to send any short alerts. I did simply exit my holdings and just sat there doing nothing, and now I'm basically getting back into the market. So we'll see where that goes. So also S&P 500, or rather, I'm sorry, the small caps ETF, here's IJR, you can also look at IWM. You can see that the small caps are dragging their feet, and they are between this red and blue lines, which basically means that there is not yet a breakout for small cap stocks. But if, in this particular ETF gets to 81 bucks, I think we can safely say that the breakout indeed has occurred. Junk bonds, of course, you can see also have come a long way. I mean, this is 52-week low here, in late December. I was again very reluctant to sell or to short junk bonds, and I did not send any alerts to my subscribers, nor did I enter myself any short trades. You can see that this resistance, overhead resistance on this chart was cleared on January 7th, and already I was not sure if I wanted to short here, so I just did nothing. That was a good thing, because notice that just a few weeks later, at the end of January, we see a breakout here, and it looks like junk bonds want to go higher. This is high yield bonds, and high yield bonds are available as an option in many of the 401k and retirement portfolios as well. So junk bonds correlate highly to the general market, and in general this means that stocks could be headed higher. Here's TLT. I have a position open. I think bonds are going higher from here. Treasuries are going higher, so the yields are going lower. This is benefiting many of the interest rate sensitive sectors, such as IYR, for example, real estate. You can see a big move there from the basically 52-week lows. And this alert here was an actual alert to my subscribers, and some people took it. So, we're seeing a strong move for stocks, and looks like the bearishness has been shrugged off, as I just pointed out. Okay, so the bonds again are also moving higher, so perhaps maybe we'll see a little bit of a pause in the stock market rally before this rally in stocks continues. Alternative scenario is also possible. Sometimes bonds and stocks move together in lockstep, but normally they move opposite to one another. Looking at the non-United States markets, here is European markets, VGK. I was very hopeful. Looks like we're going to go higher, but now the bears are coming in, and notice how we see a close below the red line here on the 7th of February 2019 right there. So if I knew nothing, I would be shorting it right now here. But I am again reluctant to short equity, and many of the foreign stocks also have been kind of breaking out. So I am just doing nothing with foreign stocks right now, but maybe we'll start buying them eventually too. Biggest loser here, of course, is Japan. You can see a close below the red here on the 6th of February. You can find out more about these indicators at MasterCharts Trading, and a follow through the next 2 days on 7th and 8th of February. So Japan looks relatively weak right now. We'll see where this goes. And of course, emerging markets also are under pressure, but I have a feeling that if S&P is going to go higher, I think emerging markets will continue higher as well. So we'll be on the lookout to potentially start buying the foreign stocks as well. And wanted to show, before we get into Forex action, I wanted to show how to think about trading stocks in general. Okay, so here I wanted to show an example of a trade that we actually did at MasterCharts Trading, and this is that of Pfizer. So how to wrap your mind around trading. Many people just get really confused and put off by trading, and truly, if you have a point of reference, and the point of reference here is the indicators, so you can see green, blue, red and yellow lines, and you can find out more about MasterCharts Trading. But if I was to turn them off, why would you be entering right there, for example, on the 5th of July? You know, why here? So the reason being is because these lines have been mathematically calculated, and the probabilities are increased when you enter according to the system, the probabilities of success. So in this particular case, I wanted to show a highlighted trade, and one of my favorites, favorite trades, we simply buy on breakout. So we do nothing and we just sit there, and then eventually the price gets up to the blue line. And here is, for example, Pfizer on the 5th of July 2018, right there. We just see a close right there. And we simply buy at that point. We do nothing, we calculate the position size and sit in the position until we get a nice 25% profit. Well, it doesn't happen every time, but this is one of those very easy trades that sometimes do happen. So to wrap your mind around trading is basically to understand which way are you going to be trading. Number one, are you going to be buying or shorting? So in this case, it's no brainer. We're going to be buying because we see a close above the blue, and we simply buy there. And then how much to buy, you can find out by using this tool right there, which is called a long position. So I can teach you all of that stuff very easily. In fact, I do teach all of that stuff at MasterCharts Trading. So this is how I wrap my mind around trading, and this is how I teach my students and my clients at MasterCharts Trading of how to wrap your mind around trading and simply just go with it without thinking about it too much. Okay, let's continue to Forex. Here's dollar index. Look at this incredible move. 1, 2, 3, 4, 5, 6, 7, 8, 7 days, just green sticks. You know, it's possible. I am kind of at a loss right now, honestly, and if you are a subscriber, you will realize that I am very reluctant to send any Forex alerts right now. The reason being is because of action in gold. And here is gold, XAU USD. It is unusual for gold to appreciate when dollar is also appreciating. You can see dollar is appreciating and gold is at least not giving up. So I am of late kind of looking at the charts here, and I'm thinking that gold, I feel like gold is more correct than the dollar. And what this means is this XAU USD. XAU is on top, USD on the bottom. So XAU gold seems to be appreciating, and even though the dollar is also appreciating, somehow this currency pair, XAU USD, is moving higher. So I am now reluctant to be long US dollar, to be buying US dollar. I would much rather be buying gold right at this moment. In fact, I have a position in one of the gold miners, and maybe in the future I'll send it. I'll show it as well. But the gist of the matter is, I am concerned. Just the way things have been acting, they are not normal. Dollar and gold usually move opposite to one another, and since gold is appreciating, I feel like I want to give more credit to gold right now for various reasons. So basically, this is what I'm thinking. I'm thinking gold will continue higher from here, and I am thinking by extension dollar and its components will continue lower. So again, I'm reluctant to be long dollar right now. Natural gas, quickly I want to show this trade. I showed this already. So we had an alert here on January 16th with a very nice move, over almost 25% move in your favor if you opened it as well. And very briefly, I wanted to show MasterCharts, or rather, I want to show the Bitcoin, and very small move towards aggressive short levels. This is still very much a bear market, so we will need to, if we're going to contemplate Bitcoin turnaround, then we need to see a close above this blue line, which is currently at 6,500, which is far still. Okay, as I said before, we have a team that is forming. Indigo campaign will be starting very soon. Sign up for the mailing list. Sign up for the mailing list. This is going to be, we're going to be releasing lots of information, especially about the indicators and the conversions of those indicators. We're already converting to MetaTrader 4.0. So do sign up at MasterCharts Trading. Also, if you click on alerts and indicators, you will be able to sign up for one of the services. We do offer free access to the training library, and they are allocated here with basically free access. You just put in your email there. Price action indicators are the ones that you see here. You know, these lines in the chart, the green, blue, red, and yellow lines. This is the price action indicators, price action trading. And you can have them on TradingView, and hopefully very soon you will have them on other platforms. And of course, alerts and newsletter, which is basically my members only blog, where I send out various alerts about various securities I trade. And we trade lots of various securities, for example, exchange traded funds, stocks, small cap stocks, and various commodities and Forex like gold miners, oil futures, and just, even retail. We can trade at retail as well, natural gas and cryptos. So again, sign up. Every single of our trials, or rather every single of our services have a free trial included with them for 30 days. So do sign up, and we hope to see you here. Thanks for watching. Have another great trading week. Bye-bye.